Hi, my name's Robert Bevan. Welcome to another Best Practice audio presentation. Profitable Property Management. The latest best practice research of Australia and New Zealand's leading property management teams will provide you with the systems and strategies to become the number one property management business in your local area. To obtain the best results from this audio presentation, as a best practice member, visit bestpractice.com.au, click on Resource Library or Products Inventory and download the 22-page manual which accompanies this presentation. Before we start, I'd like to sincerely thank the fabulous team at Rockend Technology who assisted so much in the production of this particular training session. The results of the research we completed with top property management teams led us to produce the document which focuses on 10 key areas. It's not my intention to read through the 22-page manual line by line. Rather, I'm going to go to each of those 10 areas and highlight the most important things which need to be drawn to your attention. The first area is financial management. Sound financial management, always critical, always something that every best business focuses upon. With financial management, first of all, we look at benchmarking. As a best practice member, you're able to download the interfirm comparison, which enables you to look at your business and compare it with other typical or similar businesses throughout New Zealand and Australia. On page number 4, you will see a key performance indicator schedule. Let me just draw one specific line to your attention. Line number 5, operating surplus. You'll see there that the average surplus, or for want of a better term, profitability of the average residential property management department throughout Australia and New Zealand is 29.17%. That means that the average real estate agency rent roll provides the shareholders, the owners of that business, with a 30% profit, almost a 30% profit. That is, they retain 30 cents of every dollar revenue they collect. Now, according to anybody's way of measuring business success, 30 cents in the dollar is very, very sound. It's not true right across the board, of course. When you look back on page number 4, point number 5 in the KPI schedule, the bottom 10%, a fairly lean 8% operating surplus. But wow, go right over to the right-hand side of that schedule, the top 10%, operating surplus 49.77%, or almost 50 cents in the dollar. There's no doubt that most banks, lending authorities say without any equivocation that a typical real estate agency's rent roll represents the business's consistent and bankable cash flow and capital value. Being involved in residential property management is a very, very good place to be, provided you follow some of the things we're going to talk about during this presentation. On page number 5, monthly monitoring, some of the things that the top 10% businesses are doing here. First of all, they split their profit centres. They do not operate according to consolidated charts of accounts, so that they know that their property management department is operating well, and so is the sales department, and so is the valuation department, and so is the commercial and industrial, and whatever other profit centres that they have. One thing I'd like to mention to you, and it's spelt out on pages 5 and 6 of the workbook, where we show you how to split your profit centres. But the most important thing is, if you're doing this for the first time, accountants and bookkeepers sometimes want to know, how are you going to split the shared expenses, things like premises? Well, the overwhelming majority of accountants do it according to revenue. So if you have a business where 70% of your revenue is sales and 30% is property management, split the shared expenses like premises along that 70-30 ratio, and then you'll be able to provide the figures for your separate profit centres. On page number 7, annual goals and budget. Samples A and B provide you with the templates to enable you to sit down with your accountant and do just that. In a residential real estate agency, typically Australia, New Zealand, The rent roll provides 20 to 30% of the revenue and 80 to 90% of its value. Sample B, halfway down page number 7, provides you with a number of areas that you might like to consider having as the goals for your business for the next 12-month period. Lines number 8 and 9 I'd like to draw to your attention. 8 is always the question most often asked of me whenever I address a group of property managers. How many tenancies, how many properties can a property manager manage? Well, that's not the best question to ask. The best question to ask is how many tenancies per total property management personnel? Because if it's just property manager, it depends on what sort of assistance and support that property manager receives. If the property manager has to take over the reception area at lunchtime, do all of the statements, provide all of the communication between tradesmen, landlords and tenants, they're not going to be able to manage as many as somebody who has a separate accounts department, a separate area for looking after arrears, a separate area for looking after repairs and maintenance, etc. Yes, I can tell you, and it was on the KPI schedule we looked at before, the average number of tenancies per property manager is 140, but the average number of tenancies per total personnel, and this is the critical KPI, is 70, about half the number of properties per property manager. Monthly reports, there are 6 of these that are produced in the top 10% business, that business which is the leading agency in property management in its local area. They're listed for you on pages 7 and 8. And one thing I would draw to your attention here, if you are part of the Rock End client base, if you use REST, have a look at the management reports that are available to you with that software application, because through REST they produce these reports for you automatically. But the reports that are set out there on leasing, repairs and maintenance, inspections, arrears, vacancies and rent reviews, critical to being that top 10% property management business. That's the first section, sound financial management. Second section, the second area of activity you should consider focusing upon is personnel management. First of all, the best way to ruin a good business is to have a constant churn of employees. And the best way to not have a constant churn of employees is to know what attracts and retains those people. On the top of page number 9, we give you the results of research of property managers who have told us why they were attracted to this property management business and why it is that they stay there. Very, very quickly, on the top of page number 9, first of all, the office culture. They enjoy working in the business. Second is the reputation of that business. Everybody in the area knows that this is a business that understands the needs of their landlords and their tenants, and it meets those needs. Support. Very, very important. Property management does have a fair amount of stress. Most property managers are time poor. So when they become very, very busy, they need to work for a business, or they want to work for a business where the owners of that business recognise that and provide the necessary clerical and administrative support that is required. Systems. Essential. Effective systems and procedures which are the subject of ongoing training for all personnel. Software, the technology available today, have a look at the stuff that Rock End provide, is critical. Both trust accounting and management software applications must be easy to understand, and the customer after sales service is critical. So when you're looking at property management software, don't just look at the best price. Make sure you talk to existing users of that software and discuss the after-sales service, the customer care that's provided. And the 6th reason that existing top 10% property managers gave us as what attracted them to the business and why they stayed was training. Constant changes in property management, and they need to be kept abreast of all of that current information throughout their life working within that business. Second point of personnel management, I mentioned earlier that working in a property management business is stressful. Well, best practice property managers have worked out 5 steps to remove the stress. Not totally, it's impossible to do that, but to keep it under control. 5 steps are listed on the foot of page number 9. First of all, assume your property management department has all its rent roll but no employees. Then list all of the tasks that are required to carry out your responsibilities and duties to handle that rent roll. When you're doing that, make sure you have a look at the paperless office, the opportunities available with a paperless office. And by the way, when you're looking at the paperless office concept, have a look at the Rock-End software FileSmart. Many best practice subscribers are singing the praises of this particular program. The 5th way to minimise stress, the 5th step, is to prioritise each of those tasks according to whether it can be carried out or needs to be carried out by a senior property manager, a supervised property manager, or a support person. Then once you've done that, so basically once you've done, have a look at the tasks, forget about who does what at the moment, then categorise them into tasks that need to be carried out by senior property manager, supervised property manager, or a support person, and then revise your personnel structure and your job descriptions in accordance with your findings. The results, well, why would you do it? 6 results. Property managers are able to give better service to their landlord clients. Senior property managers have more assistance because you will be moving the ratio of senior property managers to those that provide admin clerical support. Stress levels will drop markedly. The cost of labour, when expressed as a percentage of total revenue to the business, will fall. With an increase in support for your property manager, the property managers will be able to manage a larger portfolio and the profit of the department increases. There's a little note there on halfway down, page number 10, which was pointed out to us very clearly by many senior property managers. And it was to do with the personality types of those who operate in property management departments. The property manager, her or himself, they're a left-brain logical person, and it was mentioned when we were discussing remuneration because property managers are treated as executives and paid a fixed salary. Leasing staff, well, they're salespeople. It's their job to sell space. And they're right brain expressive, and they're normally paid a remuneration plus a commission or a bonus for every sale they make or every property they lease. The BDMs, very much salespeople, right brain expressive, high commission, small retainer. And then the accounts, the bookkeeping, the admin, the clerical, the support people, left brain, they're logical and they're paid a fixed salary. The third point, the third area that top 10% businesses are focusing upon at the moment to make sure they remain the number one property management business in their local area, and it's to do with client research. There's a wonderful adage in business generally that is as true today as it ever was. Ask your clients what they want, then give it to them. On page number 10, there's a sample research form that you can use to ask your clients what they want, what they like, what they don't like, what they would like to be provided with. Use sample C as a template, and then I'd strongly recommend you think about some of the software that's available to conduct research today. It's no longer necessary to send out a form, have somebody fill it in, provide a reply paid envelope, or even to get on the phone. Software companies like SurveyMonkey, have a look at www.surveymonkey.com.au and see if you can find out exactly what it is that your clients like, don't like, and would have you provide them with over the next 12 months. The fourth area of focus by those top 10% businesses, client needs. Basically the results of the research that they've been doing. One of the things that we know that the clients, that is landlords of a property management team, don't like, they do not like surprises. They don't want to find out something when they receive the monthly statement. If there's something that needs to be drawn to their attention, they like to find out about it straight away. On page number 12, the 10 current needs are listed. I won't go through them in any detail, but vacancies, arrears, major repairs, routine inspections, VIP invitations. They like to be treated as VIPs. Invite them to cocktail parties and cinema nights that you're having. The market rent review. They need a written report of the current rent. Maybe the rents haven't gone up. If they have, recommend what should happen, but they like to know that you're on top of it once a year. An opinion of value. Yes, they're property investors. Every 2 years, they'd like to know the current reasonable selling price of that property, because they're interested not just in the return or the yield, they're also interested in capital appreciation. Investment properties for sale. We'll talk in a short time about working with the sales department. But yes, they're investors, and most of them would like to know and provided with information on properties you consider or your business considers offers good potential as a property investment. Regular report. They, as I said in my introduction to Section 4, client needs, they don't like surprises. If there are major renovations or replacements necessary, they'd like a report on that. If it's time to redo the bathroom or to renovate the kitchen, give them plenty of notice. But once every couple of years, give them a report on those sorts of things. One of the things that we found out, it's listed as number 10 on page number 12, they do like to have a look at the property, but they've appointed you as their agent because they wish to remain anonymous. So every 3 years they'd like to have a look, but when the property's vacant. So if they haven't been in there for a couple of years and the property's becoming vacant, invite them to come through and have a look. It's going to make it a lot easier for you to explain what it is you're wanting to achieve when you're making recommendations if they've had a look at the property. Yes, I know you'll be sending photos with your routine inspections, but it's a very good idea to take them through, and they'd like to have a look every 3 years. Final point, and it's not listed there. They have employed you as their property manager because you are an expert in that area. They do not like receiving emails which say, there is a problem, what do you want us to do? They want to receive the email saying, yes, we have a problem, here are the quotes, this is my recommendation. So no matter what it is, if it's a vacancy, make a recommendation on whether or not there should be some renovation. Make a recommendation as to the rent that you believe they should seek. If the rent's due for a review, don't just say, what do you want us to do? Make a recommendation. A very, very clear need of today's residential landlord was that they want their property manager to make recommendations. You're the agent, that's what they employed you for. The fifth area that top 10% property managers are focusing upon is client education. Curiously, when Best Practice did research of residential investors, landlords, one of the things that came up time and time again, when we were talking about communication between them, the landlord, and their agent, the thing that was most often reported back to us was, the only time I ever hear from my property manager is when there is bad news. You've got a vacancy, or you've got repairs, or you've got arrears. Now, checking back with property managers, they confirmed that was the case. Well, that's not really the case, because you send out a statement every month. For 95% plus of those statements, there are no arrears, there are no vacancies, there are no arrears. But there's a tendency, if you're going to hold an event for a residential landlord, to have a bad news event. Something like, watch out, new legislation placed drastic demands on landlords. Well, they want good news. So why not convene, and there's a template on page number 13, an information evening for your landlords. You'll see there in the sample flyer that we've provided the last two questions that we refer to. What services should a landlord expect to receive from their property manager? Gives you the opportunity, somebody from within your office, to actually stand in front of your landlords, your competitors' landlords, and those landlords who manage their own properties, and tell them about the services that you provide. Finally, point number 8, some local area case studies. This is providing them with good news and focusing upon what I mentioned before, capital appreciation. Take a photograph of 3 current rental properties. Put them up on the big screen at the event that you hold, and then advise those people in the room, that is your current landlords, the landlords of your competitors, and those who manage the properties themselves. Tell them what that property was worth 20 years ago, what it rented for 20 years ago, what it was worth 10 years ago and what it rented for 10 years ago, and what it is worth today and what it rents for today. In short, it's providing them with good news. On the top of page number 14, Best Practice has a template for providing and running the Residential Property Investors Information Evening. Again, Best Practice members, go to bestpractice.com.au, click on Resource Library or Products Inventory, and down the 15-page template. The sixth area of focus, growing management numbers. Well, why do you want to go to the trouble of growing the size of your rent roll? On the foot of page number 14, it provides you with the answer, the summary. In this particular example, we've looked at a property worth $500 a week. You're managing it for 8%. You're getting some ancillary fees, and the local current multiple for rent rolls is $2.50. Well, every time you take one of those managements on board, you will be getting another $2,391 per annum as cash flow, and here is the important one. You will be adding $5,979, almost $6,000 for a $500 8% management, adding that straight onto the goodwill value of your business. So that's why you should do it. It makes good financial sense. When you're looking at growing the numbers, have a look at points of critical mass on the top of page 15. Currently, throughout Australasia, to generate a 20% operating surplus, and remember the average is better than that, but if you're below 20 and you want to get to 20, generally you need to have revenue, total revenue above $750,000, about $750,000 a year, and you need to be managing 550 tenancies. But I stress this is an average. You need to know what the points of critical mass are for your business. So meet with your accountant or the person who helps you work on your business, the business consultant, and ask them to confirm or reconfirm the points of critical mass you need in your local area today to achieve a 20% operating surplus for your property management department. Why 20%? Because best practice business principles tell me time and time again that it's not worth the responsibility and the work involved in running a property management business if you're not achieving a minimum 20% operating surplus. Two ways to grow the rent roll: organically or by taking a quantum leap. Let's have a look first of all at the way of growing it organically. And the most successful way that's currently operating throughout Australasia is to employ one or more business development managers. On pages 15 and 16, we set out very clearly the steps you need to take to ensure that you employ a BDM in such a way to maximise success. By the way, business development managers throughout Australasia at the moment are averaging 8 new managements a month. So first of all, 10 things you need to look at with a BDM. They're a salesperson. They are right brain expressive. They need to have their remuneration package highly slanted towards the commission and less on the retainer. They need to be micromanaged. There's a sample D on page number 15 which shows you how to do that every week. It may be you've got to meet with them every day, but BDMs need to be micromanaged. Their job is 100% prospecting, nothing else. They need to have a duty statement. There's a sample for you on page number 16, and we strongly recommend that you employ them initially on a probation period, which enables you to terminate the relationship should it not be working for you or for them. The most important point for the success of a business development manager is new business only. It's referred to on the top of page number 16. If the property they bring in is vacant, they should hand that property over to the property manager, and she or he looks after it from then on. The business development manager goes back to introducing new managements into the business. If the property is leased, it's handed over to the person who handles the leasing. They do not continue the relationship with the landlord who owns that property. Otherwise, they're going to be taking their focus of generating new business and acting as pseudo property managers or leasing manager. That's explained right up front to the new landlord or the prospective landlord when they come on board. By the way, with BDMs, you can afford to be very, very generous with their bonuses. Remember, if they bring in a new management, we showed before that they're bringing in almost $6,000 a year to the business's balance sheet, and on that 508% property, bringing in $2,400 a year in income. There will be, of course, other ancillary fees attached. So whatever the fee that you determine that you're going to pay them, be generous. They focus on income and earning more income. That's one of their prime motivators. Be generous, but do not pay them until you have been paid. So if you agree to provide the first 6 or 3 months commission, or you agree to provide one of the fees, make sure the agency gets paid before they get paid. That's organic growth. If we have a look at taking a quantum leap, if you're looking at doubling the size of your rent roll, it's going to take a long time to do it organically. The way to do that is to buy another rent roll. Listed on page number 17 are some of the things you need to consider when you're buying a rent roll. All of them are very, very important, but there's 2 areas I'd like to focus upon. Point number 2, the warranty period and the retention amount. Sure, you may see a rent roll come on the market for sale, which seems to be a very, very good price, but the vendor is not offering any warranties, so he's not guaranteeing that you're going to retain the managements, and she or he or they are not offering a retention amount. They're not allowing you to keep 10, 20, 30% of the purchase price in an interest-bearing deposit in joint names until that warranty period has expired. Strong recommendation from those who have purchased rent rolls successfully in the past. If the offered rent roll does not have a warranty period and a retention amount, stay away. Stay away, you're taking too big a risk. The second point I would draw to your attention on page number 17 is point number 6, the rate of commission charged and complementary fees. There are a lot of silly business owners at the moment trying to build their rent roll by slashing fees. By, instead of quoting 7 or 8 or 9 or whatever the going rate is in your area, they might be doing it for half that. And yes, they'll rapidly build up their rent roll. Problem is, when that property becomes vacant, there's no loyalty between the landlord and the business. When that property becomes vacant, they'll put it out on the open market and they'll give the management to the person who quotes the lowest fee to lease and or to manage. So when you're looking at a rent roll, analyse the commissions being charged, and where they're significantly less than the local going rate, discount your multiple accordingly. On the next page, page number 18, is a terrific template letter for you to use. The rent roll that you're going to buy will come from a real estate agency, usually operating within 8 kilometres of your office. For reasons that I've never been able to work out, residential agency proprietors just don't like to tell their competitors that they're thinking of selling. Here's a great way to find out if they're thinking of selling. Get your accountant or your broker to prepare a letter similar to the template on page number 18. It enables them to remain confidential and for you to remain confidential. If you're interested in growing your rent roll and taking a quantum leap, you want to buy another rent roll, use this letter, have it addressed and sent to every one of your competitors every 12 months, and you'll be the first to find out who's thinking of selling a rent roll in your area. Finally, right at the foot of page number 18, again, best practice members. If you're thinking of buying a rent roll, there are 3 template agreements that you really need to have a look at, or 3 template manuals that you need to have a look at. PL2 the agreement for the sale purchase of a rent roll, PL69, 46 questions to ask the vendor when you're thinking of buying a rent roll. PL69 is your due diligence template, and PL85, the Best Practice Property Management Department Policy and Operations Manual. So if you're thinking of buying a rent roll, you can't afford not to obtain those documents. Best Practice members, they're free, they're part of your subscription, bestpractice.com.au, and click on Resource Library or Products Inventory. Let's have a look at growing fees, the 7th area of focus. Growing fees. First thing you need to do is to work out what you consider to be a reasonable fee for the services that you provide. Once you've done that, let's assume that you're currently managing for 7% and you think you should be charging 8.5%. The costs of running any business continue to escalate. That's just part of life. The expenses continue to rise, and you cannot afford to run a business and continue to absorb those expenses. So take your current list of landlords and divide them into 3 categories. The 20% who you think will accept a fee variation, an increase, without any equivocation. The next category, the bulk of your landlords, the 70% perhaps, who believe next most likely to accept a fee increase. And then the 10% that you're not unsure about. Now the 20%, 70%, 10%, in your business it might be 30, 50, 20. But whatever it is, put them into 3 categories. Then you will contact those that you think are most likely to accept a fee variation. Now the template letter that you will use, it's sample F on page number 19. How you do this is set out completely on page 19, but write to those who you think will accept the fee variation. Monitor the results. Then when that's happened, then write to the next bunch, the 70% or the 50% in the middle, monitor the results, and then write to the final category. Now the results, it's mentioned for you right in the middle of page number 19. We have been seeing this in best practice residential management businesses for 25 years. When they introduced this system, fewer than 5% of landlords react negatively. So have a look at your fees, have a look, is there room for improvement, room for growth, and use those steps set out on page number 19. The client audit. This is something that best practice learnt from the accountancy profession. We recognise that not every client is a profitable client. Typically, in a rent roll, you'll find that 1 in every 100 landlords requires too much time. They make unreasonable demands. They don't pay a competitive fee and require discounting, and usually they want the rent to be above market, and they're unreasonable when it comes to repairs and maintenance. They have a real negative impact on the job satisfaction of the employees, of the property managers, those that work in your property management department, and they're always whinging, always controlling. These are unprofitable clients, unprofitable landlords. Once a year, sit down with the property management team, go through and work out what will probably be about 1 in 100, and you don't make money out of these people. They cost you money. 3 options: sell them to a competitor, resign the agency, or increase the fees, which justifies the amount of work that they demand. As soon as you do your landlord audit every year and you resign that management, you will find very quickly that new managements will come in and replace the unprofitable one that you resigned, sold in the meantime. 9th area, and this is something that's becoming ever more important in top 10%, not just property management departments, but right through the business. And it's getting the property management department and the sales department to cooperate. A bit earlier on in this presentation, I talked about the needs of landlords. If you have a look at the foot of page number 20 in your workbook, you will see 7 areas of focus which have been identified through the research of residential landlords. 3 of these areas in particular require the assistance of the sales department. First of all, opinion of value. Yes, they want to know what their property is worth. They are interested in capital appreciation. Now that means every 2 years the sales department need to provide that opinion of value. Yes, they should do that. It should be part of the sales agent's duty statement. Why? Because your landlords are not prospective sellers. Most of them are prospective buyers, and they should be looking at buying another investment property. Who has the investment property for sale? The sales agent. And we have, in the property management department, the prospective buyers. So your landlords should be listed as prospective purchasers of investment property in the business's database. So opinion of value every 2 years requires the cooperation. Investment properties for sale. Arrange for the sales department, the sales agents, to provide details of properties that are considered offer great investment potential to your landlords. That's what they want to hear. The annual research that you provide and the VIP invitations to attend information evenings, that requires the assistance of the sales department. So meet with them, have a system within your agency which gets the sales and the property management department together, and appoint one person to be in charge of cooperation. Getting the two departments to operate together will mean that the business's revenue can obtain a significant increase in gross revenue during the operation of that complementary service. On page number 21, valuation schedule. More for the accountant and the principal in the business, but keeping the property management team advised of just how valuable the rent roll is. We set out there how it is that a rent roll can be valued, and basically it shows you how important it is to continue to grow the rent roll and the amount of capital that is tied up in the property management department. Have a look at that schedule, sit down, meet with your accountant, and once a year make sure that your business is revalued and that that figure is placed into the balance sheet of your agency. Page number 22 is the implementation schedule. I often tell people that I consider this page to be the most important page in the 22-page document. It's the action page. Once you've been through the 10 areas of focus that we've just discussed, go to page 22 and then with the people, the senior people in your property management department, run through each of the 10 categories. Adopt sound financial management. Well, it's not relevant because it's already well done. Okay, so it's not relevant. Adopt sound personnel management. Remember, we looked at attracting and retaining and removing stress. Oh, we haven't looked at that. So let's get that into operation. Let's do that. It's not critical. Let's do it within 3 months. And who are we going to appoint? So you'll put a name there. And so on down each of those 10 areas of focus. Running a successful real estate agency property management department is not difficult, but it requires a structured approach. One of the things that I can tell you that I mentioned right at the outset, that is said time and time again by those who've been long-term successful in agency management, and particularly by those who provide funds to agency owners, banks, lending institutions. The rent roll provides consistent, bankable cash flow. It is the goodwill of the agency business, and it needs constant focus and attention. I hope by you focusing on the 10 areas that top 10% businesses are operating in at the moment, that you'll be able to improve both the capital flow, the cash flow of your business, and the value of your agency over the 12 months. Thank you for listening to this audio presentation with me, and again, thank you to the team at Rock N for their assistance in the presentation.
And we thank you for your great work and another